Hello and welcome everyone. So in today's episode, we're gonna take a look at gold versus Bitcoin. We're gonna be comparing both, which one is going to provide us with the better buying opportunity, and which one is going to provide us with much profit and much return right now and moving forward. So let's move into gold. This is the weekly chart of gold. As you can see, the bull run started 2 years ago around April, May 2019 and moved more than 60% to the upside. It reached a high of around 2075 during around July and August 2020, and then we correcting. We created this bull flag around here, as you can see. We like we said in previous videos, the price of something cannot just go up directly. It has to correct. It has to go down at some point, and this is a very healthy correction. Now, to measure the correction, we're gonna do like we used to do, the Fibonacci retracement, and we're gonna put it the top and the bottom, and as you can see, we corrected at the 50% level here, and the 50% was also a level that's held right now by the 100-day EMA. As you can see, 100 period EMA. We are on the weekly chart, so that's going to be 100-week EMA. So we corrected. This is a very strong support, and as you can see, the support did hold, and we're starting to bounce off the support right now. So moving forward now, in order to know what's next target on the weekly is the around this area here of 1780, because we are in this downward channel and gold will reach the upper end of this downward channel here. Now the question is, will it break it? And if it does, it would be a very bullish signal if you do break and close above it. This is very important because look here, last time we did break here, around here, we did break above. However, we did not close. We did not close the weekly close. We closed way below. We reclosed inside, and actually it's a very bearish signal if you fail, if you do a fake out and then re-enter the downward channel. It's a bearish signal in the short term, and this is what happened. Look at gold, it did sell off pretty bad. So right now this is what happens. This is the most likely scenario, is that it's going to the upper end. Will it break or not? Well, in order to know that, we're going to take a look at the monthly chart. Now here I'm going to remove the indicators for a better view, and here, as you can see, last time we had something similar was around 2008. So we had this kind of cup and a handle formation. The cup started in 1979 during the peak, when inflation really was very strong, and then we created this cup here, and then the handle here was around 2008 2009, which was after the financial crisis. And after we did break, we had a tremendous up run here. Now if you do take a look here, the textbook and the theory behind the cup and handle is that you should take how big the cup is and then put it at the breakout, and then you would have an upward target, and it was an accurate target of around 1700, except that we did have more euphoria going upward, because that's what happens in a cycle. In a cycle there's multiple phases, and usually at the top there would be this kind of euphoria that can drive the price really high, and this is what happened here. People would start chasing the price, people would start FOMO again, and this could give this last bit of boost of price before crashing down. Now that's what happened. We crashed down, and right now we create another cup here, and this is the handle. And if history repeats itself, because around here, as you can see, it was the financial crisis, and right now we had the COVID crisis. Right here, the Democrats took all three chambers of the government. Here, the Democrats have all three chambers of the government, and Democrats promised a lot of stimulus. We just passed, by the way, Joe Biden just passed 1.9 trillion. He signed the relief package that was passed by the Senate and the House. So right now the stimulus is passed and it's 1.9 trillion, and this is it's very bad for the dollar, but it's very good if you're long on the precious metals, if you're long on Bitcoin, if you're long on cryptos, anything, commodities. And we're gonna talk about commodities after, but this is what's happening right now. Cup and handle. If history repeats itself, what happened around here, we can just take the same thing, which is we take the top here, like how big the cup is, we put it here, and it gives us this target of 2900. And if you do get that little bit of movement upward, you know, the euphoria at the end of the stage, we could reach 3000. And by the way, 3000 is the target that Bank of America has for gold. Goldman Sachs has a target of 2000 right now. They had the target of 2300, but right now it's 2000 of gold. And if it reaches 2000, they're gonna increase the targets or maybe decrease it. We're gonna see. But this is what the monthly chart is telling us. Now, if you do head into the weekly chart again, this is a bull flag here, and the bull flag, if you do take the Fibonacci expansions to kind of give us a target of if the bull flag breaks, this is what's gonna happen. This is the next target for gold. We have one at around 2100 and one around 2400. We have these two targets. We have another one at 2900, which coincides with this target that we have around 2900. So this could be a target. This could be really a very strong target here, and a very I won't be surprised if gold reaches 3000. Now, we are very far away from that, and a lot can happen that could drive the price in both directions, so be really prepared. And by the way, any dip below this 100-day EMA, 100-week EMA here, 100-period EMA, could be really a bearish signal for gold. But right now, with the support did hold, as you can see, we had this support of around 1700 to 1680. Yeah, there you go, 1680. We had this support here, and this area of support did hold, and right now we're bouncing back. Now, if you do take a look at the daily chart, so what do I think personally would happen to gold? So we have this target of 1780 around this area of resistance here. And this area of resistance, I think we're gonna have some choppiness here around, but eventually we will move up, and this would be a critical level to watch for. And after this level, we could have this level will be very decisive. So if this level breaks, the next target would be 1871. Around these areas of 1871. There you go. The next target would be 1871, which is the old support here and the resistance around here. And if we do break 1871, the next target would be the most important target, which is around 1950. Now, we failed many times to break above this target. So if we do break and close above 1950, it could be very bullish buy signal for gold. As you can see, we failed here and we failed here, and if we do break above it, it would be a very powerful signal, very powerful buy signal. Now, this is the Fibonacci retracement here, and how to, in the short term, what we're looking at. So as you can see, we did break above here. We went up until this level of 61.8% of this downward movement, which means that gold corrected 61.8% of this movement. And right now, this zone is very important. You know, we talk a lot about the golden zone between the 50 and the 61%. This is a very important zone. We're sitting at that zone. So right now, in the short term, if we do break and close on the intraday, we do close above this level here, this level of 1735, 38 to be more precise. We are around 38, but it's this area here. If we do break above this area, the next target would be this area of 1750 in the short term, and if we do that, we're gonna reach the target of 1785 here. So these are the levels to keep in mind. If you're looking for short term, this is a very good place to take your profit and then reload on the dips, because this is traders market. This is not a buy and hold market, except if you bought around here, it could be very good for buying and holding. But if you bought if you're a trader, you would make way more money. You would come on the in and out, so you would buy here, sell here, and then reload on the dips. Because if you've been for gold, if you've been buying and holding, you since let's take for example, if you've been buying and holding since last year, since April of last year, look, the price has come down to the same level. So you made no money. If you buy here, you made absolutely no money. If you bought, let's say for example, you did buy and hold around June, you're actually losing money right now. So gold is right now is a trader's market. It's not just a buy and hold market. You can keep exposure by having one position or few positions long, but do take some profit and be quick and nimble, because this is what happens. Gold do have these big corrective movement and it can catches you off guard. It's very painful, so be really careful when trading gold on that. Now, as you can see, I did draw this possible scenario here, because if we do break, we can create this bullish reversed head and shoulders with this. Let me remove the Fibonacci. 2 sec. So we can have this as a head and shoulders, a reverse head and shoulders. So this is the shoulder, this is the head. If we do form a head around here, and this is gonna be the shoulder. And if we do break above it, it would be a very, very, very good buy signal around there. And why am I talking about this? Because we had almost the same thing here in 2008. We had the shoulder, the head, and the shoulder, and we did break above it and we reached the target of the shoulder. So really something really important to keep in mind. Now, this is gold. This is my personal view when it comes to gold. And when it comes to Bitcoin, we did discuss with you in detail in one of our last videos about the crypto and how Bitcoin, what is the outlook for Bitcoin. So this is the daily chart. We did discuss with you that any break above, we had the price was compressed between this EMA here and this line here, and any break above this line could be really bullish, and this is exactly what happened. We discussed with you exactly in detail. And the second scenario was a break below the EMA, but we didn't have that below the EMA and below this level of 50%, which by the way was a very strong support, and this level did hold. Right now we're at this resistance, and if this resistance breaks, if you do have a daily and weekly close above the 57,000 USD when it comes to Bitcoin, it could be a really, really bullish signal, and we could have the next target. We discussed with you the next target, but let's go ahead over one more time. But the next target, the expansions, we would have a target of around 70,000 USD when it comes to Bitcoin. And also we would have another target of around 85. So keep these targets in mind. If you do break the next target, personally, I think it's going to be the 70,000. We're going to have a correction on that. So it could be good for trading. If you're a trader, this is a trader's market right now. You take your profit around here, and then you reload on the dips. And this is how I personally play these kind of markets. And you can win way more money than just buying and holding. Buying and holding can win you money, but this is a much better way to win money. Now, when it comes to which one I'm more bullish on right now, I would say gold. Because when it comes to Bitcoin has already made the move. And if you already missed on Bitcoin, on the moves on Bitcoin, sure, Bitcoin still has the room to double. Bitcoin can double right now and reach 100K. It can do that. However, it won't give you as much money as if gold reaches 3,000, for example. and this is something really important. And when it comes to gold, when it comes to commodities in general, there's something really interesting to look at is this, the equities versus the commodities index. Now this, it compares the price of equities compared to commodities, and right now we're at an all-time low. The median is 4.1. Right now we're around 1.6, I think, last time I checked, or 1.5. And this is an all-time low. So right now what it means is that commodities are very cheap compared to the stock market. And last time we had that was the dot-com bubble. And after the dot-com bubble, the stock market crashed and the price of commodity went up. So this is what created this movement around here. And we could reach the median again. So this is a commodity super cycle that's been building up here, and this can provide you with very great opportunities on all commodities, especially when inflation is going to run hot because of all the money printing and the stimulus going around. So if you do take a look back at gold with a target of 3,000, it could be really profitable for you if you can start now with gold, start trading gold right now. And for me personally, I think that gold has way more upsides than Bitcoin, because Bitcoin has already moved up, but gold, you have less risk and a bigger reward. And this is why gold for me is better right now than Bitcoin. Bitcoin was better before, but Bitcoin has already made the moves right now. Gold, and not just gold, commodities. For example, we have silver. Silver has huge upside potential. We could reach, we're gonna make another video about silver, but there is the levels of 33,000, which is the 33 US dollar here, and the 33 US dollars. This is the target that Goldman Sachs has when it comes to silver. Now there is not just silver, but there's also platinum. There's also copper. Copper has been a very, very profitable thing. If you bought copper around March, you basically made almost 100% profit. And if you do take these highs, you actually make more than 100% profit in 1 year, less than 1 year. And this is very, very good market around here. Copper is used in electric vehicles. Same for silver. It's used. The thing with silver and copper is that right now you can trade them as a safe haven asset, and also they have an industrial use, so they benefit from the opening again of the economy, and they benefit from electric vehicles, for example. Platinum is used in biotechnology, and because it's used in biotechnology, it can be with the vaccine news. It can be really it can benefit really from the vaccine use. There's also palladium to keep in mind. Palladium, the Tesla batteries, they use palladium. So this is why you can see that little bit of correlation between palladium futures and the Tesla stock. So these are things to keep in mind. And also, if you do take a look at the CME group, if you go to the official website of the CME group and look at the gold contracts here and the open interest and the volume of each contract, each monthly contract, you're gonna see that. Look at the opening interest that we have in April and June. It's huge. This amount is, so basically to know how much open interest is open, you're gonna have to take a look at this amount. You put, let's take the calculator and calculate how much in terms of dollars is this open interest. So we do have this, and this is basically how much contract, and each contract has 100 ounces of gold. So we do multiply that by 100, and we do multiply this by the spot price that we have right now in gold, which is around 1724, and we're gonna multiply that by 1724. So we do have an open interest of 42 billion in April, in the April contract right now for gold, almost 43 billion. And this is huge open interest coming into the gold market. So just keep that in mind. This is something really interesting, and this is a good website to CME Group to watch the volume. So this is it for this video. We took a look at which one is better, either Bitcoin or gold, and the upside target for gold and also for Bitcoin. So if you have any questions, please do let us know, and hope to see you soon in the next episode. See ya.